Good evening. Anything that we discuss is going to be for educational purposes. I'd like to welcome you all to Digital Trading Floor. It's a platform where we disseminate financial data in real time to provide actionable insights. The purpose for making this video is to analyze Nifty options open interest data. We would be analyzing Nifty on multiple time frames and we would be framing a view for tomorrow, 4th June, Friday. And apart from the index, we would also be discussing our stock watch list. So let's start by analyzing Nifty options open interest data. So for the new weekly expiry contract, the max pain level is at 15,650 levels, and the next expiry is going to be on 10th June. So if market was to expire at 15,650 odd levels or near about those levels on 10th June, in that scenario, option writers would make profit at 15,650 strike, and call and put option buyers of 15,650 strike, they would be suffering huge losses as on expiry. A large percentage of options they expire worthless, especially if option buyers are holding 15,650 strike and market expires as well on 15,650. In that scenario, those options, they premium would be worth zero. Now, we would be analyzing the overall open interest data for 10th June weekly expiry contract. So the highest amount of open interest for calls lies at 16,000 strike, followed by 15,700 strike. And highest quantity of puts have been written at 15,600 strike, followed by 15,500 strike. So broad range is of 15,500 and 15,600 to the downside, and 15,700 to 16,000 levels to the upside. And if you were to see what happened intraday today, as you all know, today was 3rd June weekly expiry. So we would have to see this data say tomorrow or from Monday onwards, then it would be providing us with more clues. But right now it just corroborates the overall open interest data, which suggests that highest amount of calls were written at 16,000 strike, followed by 15,700 strike, and highest amount of puts were written at 15,700 strike, followed by 15,600 strike. Now we would be analyzing Nifty on multiple time frames. So here you will see that on the monthly time frame, the market is trading above its opening price and it is under control of buyers above 15,629 levels. And if you were to see the weekly time frame, it is again under control of buyers as it is trading above 15,437 levels. So whenever we have a situation where price is trading above both 15,437, the weekly open, as well as the monthly open 15,629, we would have a situation of full time frame continuity in which buyers would be aggressive in lifting the offers, and you would be observing that different values of the monthly as well as the weekly time frame. It is because on Monday a new week started and it was 31st May, and a new monthly candle was started on 1st of June, which is Tuesday. So that is why the monthly open is currently at a different level. And if you were to see the daily time frame, as we discussed yesterday in our video, we were discussing potential of market of expiring around 15,700, and it today expired around 15,690 odd levels. And it was because of that we had yesterday made a lower high and a lower low. So it could have fallen today, and it could have potentially made an inside day, or maybe a resumption of a new downtrend with by making a new lower high and a lower low. But it instead open gapped up and ultimately formed a higher high and a higher low, which tells us that right now it is again in an uptrend. That is why yesterday in our video we had discussed two likely scenarios, and the first scenario, it played out as expected. So right now we are in an uptrend based on the price structure. Uh, if we see the monthly, it is under control of buyers. If we see the weekly, it is under control of buyers, And in terms of the daily structure, we are making higher high and a higher low, so we are in an uptrend. And based on the price structure, we get the following scenario for Friday. Above 15,690, we can trade towards 15,730 levels and potentially 15,762 levels. And below 15,643 levels, we can potentially trade towards 15,611 levels, 15,586 levels, and potentially 15,554 levels. And the neutral price range for tomorrow is going to be 15,690 to 15,643, in which one can refrain from making any trades on the index. Now we would be discussing our stock watch list for tomorrow. This is a neutral price watch list, that is in these stocks we don't have any bias. We are prepared to trade them either side, whether if long triggers or a short trigger, and the cause for the trigger would be the break of today's high or low. And that is because these candles, they are inside candles on the daily time frame, and they are formed when there is an equilibrium between both the buyers and the sellers. So we'll look to establish a position if either side of the range breaks. So our first stock is Just Dial. We'll look to establishing a position above 964.7 with a normal position size, and since it's in an uptrend, we'll look to establish a short position below 926 with half our normal size. And conservative traders, they can refrain from making any short trades and only look for only buying opportunities, because in terms of trend, it is trading above both 5 and 20-day exponential moving averages. Our next stock is Gsfc. So Gsfc has made an bearish cross under, as it is trading below both 5-day and the 20-day exponential moving averages. However, it has formed an inside candle today, and it was up almost 5% today. So in Gsfc, we would be looking for shorting opportunities below 103.95 levels, and we would short Gsfc with a normal position size. And since it's an inside candle, that is, it's in an equilibrium right now, so if it breaks to the upside above 109.85, we'll look to establish a long position with half our normal size, because it's in a downtrend. So that is why for short position we would be establishing a normal size, and for a long trade we would be establishing half our normal size. Next stock is Indian Hotels. So it is in an uptrend, and it is above both 5 and 20-day exponential moving averages, and we'll look to establishing a long position with a normal size above 139.5 levels, and we'll look to establishing a short position below 133.8 level with half our normal position size. And our next stock is Bharti Airtel. Bharti Airtel is in a downtrend, and it is currently closed above 5-day exponential moving average. However, it is trading below its 20-day exponential moving average. In terms of the trend, it is in a downtrend, and we look to establish a short position below 528.45 levels with a normal position size. And since it's an inside candle, we'll look to establishing a long position above 533.5 levels with half our normal position size. And I like to remind you that stay tuned for our long and short biased stock watch list, which I would be sharing in my blog post around 9:45 p.m. and that would be comprising of sectors that are relatively outperforming the index. Like IT sector is currently underperforming, and realty sector as well as PSU banks, they are outperforming. So I would be sharing my long and short biased watch list around 9:45 p.m. So do stay tuned for that. Finally, I like to summarize that tomorrow above 15,690, we can potentially trade towards 15,762 levels, and below 15,643, we can potentially trade towards 15,554 levels. And broadly speaking, we're in a range of 16,000 on the upside and 15,500 on the downside. And the max pain level for 10th June is at 15,650 currently. and our neutral stock watch list comprises of Airtel, Indian Hotel, Gsfc, Just Dial. And I have already discussed earlier in this video about the levels which would trigger entries in these stocks, and I'll remind you once again that do stay tuned for my stock watch list, which would have a definite bias either to the up or to the downside, which I would be posting in my blog around 9:45 p.m. Finally, I'd like to thank you all for watching this video. Do hit the like button, share this video, and subscribe to Digital Trading Flow YouTube channel. Thank you.